Suddenly we're seeing a flight to safety. Stocks gapped down and interest rates plummeted. By extension, Treasury bonds rallied. However, I think that this might be not the top yet, as the junk bonds signal a potential stock bounce is quite likely and relatively soon. And gold again reverses higher and could hit records, so let's see where we go from there. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, August 1st, 2025. Don't forget to share, like, and comment on this video. This is what keeps this channel going and helps promote the video. Thank you for that. If you're a subscriber, stay tuned. We'll be covering various ETFs, some foreign ETFs such as Brazil, India, and Switzerland, large cap stocks like American Express, Nike, Verizon, as well as some of the speculative securities such as Aptiv, Estee, Lauder, Archer Daniels, Midland, as well as American Battery Corp, and MindMed. This is a psychedelic firm. If you're not yet a subscriber, consider going to MasterChartsTrading.com, sign up there. I have 2 products and 1 trading indicators and newsletter combo, so you can sign up there for that. As always, I use proprietary MasterChartsTrading.com price action indicators, which you can see on this chart. This green, blue, red, and yellow lines. They are very helpful in trading. You can also use it to set the trend, or at least to ascertain the trend, as well as find the price levels at which to buy or sell a security. We are currently looking at S&P 500, and yesterday, I'm going to zoom into the action a little bit. So yesterday, on Thursday the 31st of July 2025, we had this big red candlestick, and it's pretty clear that this is a bearish engulfing. So this candlestick from 31st of July fully engulfed the previous candlestick from the 30th of July, the Wednesday. Not only that, not only the red body of the candle fully engulfs the previous real body, or this red part of the candle, the entire candlestick from yesterday, from the day before yesterday, from July 30th, is fully engulfed by the range of this Thursday's candlestick. So we have not only bearish engulfing, but what's called an outside reversal, more or less. Today we have a confirmation of this outside reversal with a gap down, a pretty sizable gap down, followed by a follow-through to the downside, and obviously the candlestick is red, and it's not, the selling doesn't look complete because this candlestick from today doesn't look like a hammer yet. Not only the red part, the real body, is bigger than the shadow of the bottom, this little tail of the bottom. Also the close was closer to the bottom of the candle, so the selling pressure continued throughout the session, almost unabated. However, there was a small bounce before the end of the session. So right this instant, I think we're not yet done. I mean, we do have pretty sizable gap here now. You know, there is a gap between yesterday and today, between the 31st and the 31st of July and 1st of August. I don't know if it's going to get filled immediately. I think we still have some selling to do. Namely, if we use my indicators, we can see that the next support level is marked by the green line, and it is at 6,160 level, and it is about 1.5% from today's prices. So I think this will get touched. This level will get touched. We can also turn on the exponential moving average. I don't normally use it. However, sometimes it's useful. So we can actually look at where the exponential moving averages are. So for example, we can set it to 20 days exponential moving average, and you can see we already pierced that. We can also try the 50-day. Oh man, it's like crashing on me here. We can also try the 50-day, see where that lands. $50-day. So I think, yeah, so the 50-day is basically around where my indicator is, but the green line for the indicator, so around 61.40, minus at 61.60, but it's pretty close. I think that will get tested very, very shortly. You know, we basically will need to watch and see what happens. So about 1.5% down. If it doesn't hold here, which is possible, I think we could continue lower towards the blue line. If we continue lower towards the blue line, it will be a very healthy correction. And around the blue line, which is currently at 5,830, or about 6.5% down from today's prices, that would be what I call a strong support marked by the blue line, which would be, if it bounces there, if it stops falling, would be a good buying opportunity. So for example, similar to what we had before here in May of this year, 2025, we saw a close above the blue line and basically a very nice big rally. So this is what I am seeing on this chart. We can go a little bit further and try to do intermarket analysis. So we're looking right now at Treasury note yield, or 10-year Treasury note yield. And I think it has finally decisively broken below this blue support resistance line. You know, we had multiple breaks here. One was back in June, 23rd, 24th of June, but that didn't really go anywhere, and the interest rate yield, interest note yield was back above this magical 4.36% line. So this blue line is 4.36%, and this is just 10-year Treasury note yield, ticker symbol TNX. Then we had another break here on the 9th of July, another break on 22nd of July, another break here on the 29th of July. None of them really had a big follow-through. Today, however, finally we had a really sizable red candlestick, meaning that there was really very little, upside pressure to the note yields, to the yields, interest rates rather. So right now what I'm seeing is a further decrease of interest rates is quite likely, with or without Federal Reserve's help. I think in this case the markets will just take care of themselves. We can also watch the same action, but in reverse, looking at IEF, ticker symbol IEF, or also known as Treasury Bond Fund, so 7 to 10-year Treasury Bond Fund, and you can see we're approaching multi-year highs. So let's look at it on the multi-year chart. So if we break above the March of this year's highs, we will be at like 3-year highs for the bonds. So in Treasury Bond Fund, very close to multi-year highs. And like I said, that implied that interest rates will continue lower. As you may know, interest rates and bond fund prices move in opposite directions. So this is a classic flight to safety. When when the bonds rally, Treasury bonds specifically, and stocks drop. So right now we're seeing exactly that. Especially today, we saw a nice move higher for bonds, almost a percentage point for 7 to 10 year Treasury bonds, and for longer dated ones, TLT, over 1% move higher. And of course, the opposite happened to the stocks. We saw a drop for stocks. So pretty clear flight to safety, as I was mentioning in the introduction to the video. This is suddenly a flight to safety. Stocks gap down, interest rates plummet, by extension bonds rallied. However, we can look at another measure that I like to look at, and this is again another intermarket or between markets analysis point. We can look at J&K, high yield bonds. So high yield bonds normally move together in lockstep with stocks. So for example, on this chart, I'm showing you the high yield bonds, and on the bottom here we see a correlation coefficient, correlation to the S&P 500. Correlations of high yield bonds to the S&P 500 are very high. Of late they've been 90%. So 90% of the times stocks and high yield bonds are doing the same thing. So notice on this chart, whereas stocks actually gapped down and continued lower in a collapse-like manner from yesterday, high yield bonds barely budged. Nothing really happened, I mean, they moved a little bit, but nothing as dramatic. So this to me looks like we are gonna see, some pullback for stocks. I think again, it is almost a guarantee that this green line, 6,160, will get tested. But that might be it. I think that could be it. We might just, try to bottom here and attempt a new records. For S&P 500. Unless, of course, something again, changes next week or so, and high yield bonds also come under pressure. But for now, I don't see much contagion, so to speak. And so this was maybe like a knee-jerk reaction to the tariffs implementation, where stocks dropping and interest rates rising. Let's see what happens. Also make a comment. Let me know what you think about this commentary. Let's continue with a different security. We're currently looking at the US dollar. Currency ticker symbol DXY. So a few weeks ago, literally during the live programming, I wrote here rebound very likely. So on July 1st, July 2nd, July 3rd here, basically rebound began, and we've been kind of bouncing in this wave-like manner. We're currently above this yellow support resistance line. Yes, today was a very significant drop of over 1%. However, notice that we still haven't gone through the yellow line. We're currently above it. So on the 29th of July, we burst above this yellow support resistance line. And then on the 30th of July, we rallied hard higher. On the 31st of July, we went up higher. Today, big gigantic candle, but so far we held the support at the yellow line. So this is telling me that a dollar is not likely done with this upward move. I think we will continue higher, most likely towards this red support resistance line. So somewhere around, from today's price levels, I think we can easily rally around 2% or so, 2.5% towards the red line. If that happens, most likely gold will again come under pressure. So today, obviously, gold rallied over close to 2% actually. Yes, because of the way the dollar behaved, dollar dropped. So will gold continue rallying? This is $1 million question, because since 22nd of April here, gold has been unable to make new records. We've been basically trading sideways. We've been attempting to move higher, but so far have been failing. We're trading right around the green support resistance line, but so far no move higher. If we break to new records, this could be quite dramatically bullish. Let me explain why. So this sort of moves, well, let's just kind of take this from November of last year. So this sort of from previous sort of sideways trading, we had an upward move, sideways trading, and now if this continues higher, we need to duplicate this on the upside. So probably like a relatively significant move to the upside should we break to new records. So something of this nature, like we might go to 4,000 or so. Obviously this is not exact science, but you know, this is sort of the way people estimate the moves up. Conversely, if we don't break to new records and finally we roll over, and I kept saying this, that you know, if the dollar continues to strengthen, gold will come under pressure. But this pressure has been relatively muted. So dollar needs to possibly rally, you know, somewhat more, and I don't really see why it can't. So we could see dollar appreciate still more. And if it does again, I think gold will come under pressure. So we're currently at first support marked by the green line at around 3,300 or so. And strong support, should we pull back, is around 3,100 or so. So yes, I think gold could go really either way right now. It just all depends on the dollar, and if dollar even continues to appreciate, gold will come under pressure. I'm also watching gold miners. Gold miners, ticker symbol GDX. They have been less decisive. I mean, rather, they actually made a fresh 24-year high. But then they pulled back here for a last week or so. And yeah, not really much we could say about this chart. We just need to watch the way dollar and gold interplay. So let's give it a few days more and see what happens with gold, especially as far as the rest of the securities covered today. Let me know what you guys think. Otherwise, head over to MasterChartsTrading.com, click on sign up for one of the products. Again, I have two products in one bundle. So trading indicators are these lines in the chart. You can use them to trade pretty much any security on most time frames. They're used to set the trend. They're also used to find a good levels at which to buy or sell your stock. And the other product I have is the newsletter. So I send out daily alerts and weekly members-only videos to my subscribers. So, for example, this week we'll be covering various securities such as large cap stocks, foreign ETFs, regular ETFs, American ETFs, large cap stocks again, and various speculative securities such as, for example, Rivian, MindMed, this is a psychedelic firm, as well as American Battery Corp. Zoominfo also looks kind of interesting. And of course, the best deal is to get both trading indicators and newsletters. All my packages have free 7-day trial. Best deal is to get the yearly subscription for indicators and newsletters, which is a $49.95 equivalent per month if you buy a year ahead. You can also get a monthly subscription, and once again, you have free 7-day trial on all of the packages. That's it for this week's recap. Please don't forget to hit the like button, subscribe to this channel, share this video, make a comment, and have another great trading week. Bye-bye.